The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is our hour to talk taxes. So get out them 1040s and your W-2s and your 1099-Rs and bring your questions to the phone. Give us a call in studio, 803-0930, 803-0930, star 930 on a cell phone. And I have Chris is back at the office. This is his off week. And I have Tiffany Fabian with me. Hey, Tiff.
Hey there, Esther.
It's nice to be out, isn't it?
It's very, very nice.
It's starting to kind of melt.
Yeah. I tell clients that I just hunker down, and any bit of information about the world they give me. So it's good to be out.
Yeah, that's true. So if you have any tax questions, 803-0930, 803-0930, star 930 on a cell phone. Before we're our well, you wanted to say something, Tiff. What did you have to say?
I wanted to say, don't forget that all of our 33 offices are open Monday through Friday, 9 to 9. This isn't what I told you.
Tonight they're open 9 to 9.
9 to 9
right?
tonight.
And then our three mall offices
are
McKinley
open
Mall,
Sunday.
Boulevard Mall, and Niagara Fashion Outlet are
open Sunday as well.
For mall hours.
And don't forget, we have free 1040 EZ to the end of February, so take advantage of that. Take advantage of all of our offices. We have great, knowledgeable staff, and they're there to answer all your questions.
And that is for sure.
Yeah.
The other thing our topic is let's talk about credits, because a lot of people have no idea that the tax code has built into it money you get back if you didn't pay money in.
Right.
And the big one is the earned income credit, which is why they're holding up refunds, because there's so much fraud. But I'll give you an example. Let's say I call you and I'm 62 years old, and I say, hey, Tiff, do I have to file a tax return? I worked at Walmart last year and I made $6,000. What would you say?
Yes, you should file a return, even if you don't have children. I'd want to know if they have children, supporting children, but we're going to say a 62-year-old doesn't. So if you're up to the age of 65 and you make about that amount of money you'd make, qualify for earned income credit.
That's exactly right.
Yeah, so yes, you don't have to.
Does this person have to file a return? No, they don't have to. But they have an earned income credit coming of $510.
Yep.
Right?
Please
and
go
30% on the state of New York. Mm-hmm. So they have another $150, $60 on New York State. So they have like almost $700 coming, even though they didn't pay anything in and they don't owe any taxes.
That's exactly right. So they should go file, and then, like you said, they'll get a credit on the state as well.
As long as you're between the ages of 25 and 65 and you have wages, you should look into filing your tax return, even if you don't have to, because you might qualify for the earned income credit. But of course, and we'll talk about that as soon as we get off these calls. If you have children, whoa. Then it's a lot of money.
That's right.
And I'll talk about that in a second. I'm going to go to the phones, and I'm going to talk to Linda, who's been waiting for so long. Hi, Linda. How can we help you, my dear?
Hi. Okay, question for you. This is about the 2018 tax bracket.
Sure.
And just let's say hypothetical total income is $90,000. Would you be doing those different tax brackets on the total wages, or?
Didn't you just email me?
Oh, yeah, I did.
All right, and I emailed you back. The $90,000 it's graduated. So the first level is going to be at 10%. The next level is going to be at 12%. The next level is going to be 22%. The next level is going to be 24%. So each of those levels, if your taxable income is 90, you have to go to the tax rate schedule, and you're going to find out that the first level is going to be taxed at 10. Then the next level is going to be taxed at 12. The increase over that level.
But it's not your adjusted gross. It's your taxable which is found on page 2, Linda.
Yeah, so my question, not so much those different brackets, but is that based on $90,000, or is it $90,000 mine is.
It's 90,000 minus the either itemized deduction or standard deduction.
Okay, so really then it gets like that. And,
It's less.
Child credit and.
No. First, you do the income. Then you take off the either standard deduction or itemized deduction. Then you're going to come up with taxable income.
That's
on that
what it
taxable income, you're going to determine the tax. What's next is the credits. The credits reduce the taxes.
Okay, awesome. Okay.
All right. Thanks, Linda. Thanks
And
for
if you
calling.
have other questions, let us know because it's very complicated. It
Right,
is.
right. But she had just written me, so I remembered that. And by the way, if you go to our website at egtax.com and you write a question, I answer it for you. So
Even
those of
when
you
you're
that can't get
doing-
through, go to egtax.com. We're very happy to help you with any of your questions. Let's go back to the phone and we'll talk to Mike in Wheatfield. Hi, Mike.
Hi. Are banks still required to send you, amount or earnings on a bank account? And so, what is the cutoff date?
Well, if you have more than $10 in interest income, they're going to send you your interest statement on a 1099. If you have paid mortgage interest and it's over $600, they're going to send you a 1098 statement, and it should have been out and postmarked by the 31st of January.
And the only reason it would be later, some banks ask for extensions, but I can't imagine they would have to ask for an extension on that.
But it's $10 the limit. I mean, I didn't get anything yet, and with the low interest rates, most people.
Right. Well, many people are not going to get anything, Mike, because it's under the filing requirement for the bank to report. So all you have to do is contact your bank and ask them what the interest was, and you can put it on your tax return even though you haven't gotten the form.
But there is no documentation of that.
Not if it's under $10.
So they won't like question you if you.
No, I mean they didn't send it to the IRS. They didn't send it to you. Just morally, you're supposed to report it on your tax return. So just call the bank, find out how much, and put that on the interest line.
I guess that happens to a lot of people nowadays with savings accounts.
That's true because there ain't too much interest.
Thank you.
Thank you, Mike.
Hey, Esther, somebody texted in a question. It says if a mom is 86 and withdraws $12,000 a year from an IRA, does that count for earned income credit?
No. Okay, so on the earned income credit, listen to the word earned, okay? Earned income. So on a pension, it's unearned.
Unless
right?
she's disabled.
Right. Now, there are people that are disabled, okay? Like let's say 45 years old, maybe you're a police officer and you were injured in the line of work and you get a pension. If it's a code 3, that means that you were disabled. That pension then is classified as wages. And in that situation, that disabled person would then be able to use that for earned income. But grandma, 86, not so much. Okay?
No.
I'm Esther Golias, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. We're going to take a short break. We'll be back with your questions on the other side. Hey, I'm Esther Golias, the tax lady from EG Tax. We got all of our offices open 9 to 9 tonight, 9 to 9 all next week, and then 9 to 5 on Saturday. If you need the best tax help for reasonable fees, EG Tax is your place to go, and we want to help you. So if you have questions, 803-0930, 803-0930, star 930 on a cell phone, and we've had Chucky waiting a long time. Hey, Chuck.
How you doing?
Good. What can we help you with, sir?
Appreciate the phone call. Yeah. I got into Bitcoin a while back when it was a couple $1,000. I don't have a lot invested. But in the beginning, I was told that not until I turn it back into fiat, regular American money, would I have to get taxes involved if positive and negative gain or loss. What do I do? Because the way cryptocurrency works, or the way I had to do it, I have to buy Bitcoin, and then I can turn my Bitcoin into some of the alternative coins that are out there.
Well, the minute you trade it, it becomes taxable.
And it goes on a schedule.
And it goes on a Schedule D.
So, like, what is there? How do I tell my tax guy or you guys? Like,
Well, I mean, he should know. I mean, whenever you have traded it, if it goes from this to that, at that point in time, whatever you traded it for, that's going to be your basis for the sale.
but I traded it for, let's say, I bought $300. Just for an example, I bought $300 of Bitcoin. I traded it over to an alternative coin.
For how much?
$300. I traded it in.
All right, so you didn't have a gain, right?
Correct.
Then there's no gain, but you have to report it.
Oh, I see. Okay.
Okay.
Kind of movement.
Right.
To report, but and then okay.
I mean, but let's say you had $300 for Bitcoin and you traded it for $500 in XYZ, right? Then you'd have a $200 gain.
Yeah. But,
okay.
yeah, it doesn't. The crypto doesn't really work that way, but it's not like.
Well, but it is appreciating. Yeah. So if you bought it for X and sold it for Y and you had a gain, then the gain is going to be taxable.
To move it over. Only bought 300. I took 300.
You know what you can do, Chuck, if you want to call later at the office and we could discuss it at length. But right now I have a lot of other calls, and so you can call 632-7886, or you can go to our website at egtax.com, ask the tax lady, put me your stuff in, I'll send you some examples, okay?
Awesome. Thank you.
Thanks a lot. Bye-bye. Let's see, we're going to go to Mary Ellen. Mary Ellen, how can we help you?
Yes, good afternoon, Esther and Tiffany. I want to clarify what I heard last week about a New York State refund and how you declared your itemized deduction.
Oh, that's good. I'm glad you're bringing this up because I'm sure everybody does it wrong or mostly wrong. Let's say that you have a New York State refund of $100, all right, from 2016, right, that you got in 2017. Right. But that refund was comprised of, let's say, $990 in child tax credits, all right? Mm-hmm. And you itemized your deductions on your federal return. Mm-hmm. Even though the federal return says taxable state refunds, most people would be inclined to put the $1,000 down on the federal return the next year as taxable income. But the truth is the only benefit that you got was $10. The $990 from the $1,000, the $990 was a refundable credit that New York State issued. So the only benefit you could have gotten on the Schedule A was $10, and that's all that's taxable the next year.
Okay, so without the child credit.
Well, there's child credits, there's fireman's credits, there's earned income credits, right? There's lots of credits.
Right. We just talked about earned income credit up to age 65 after.
Right. But that's for people that don't have children. We haven't had a chance to talk about the earned income credit for other people that have qualified individuals.
Okay. But so for myself, where I had no credits. Mm-hmm. And on the itemized deduction, I used the sales tax.
All right. Well, that's different because, again, if you use sales tax, then you got no benefit for New York State withholding. So therefore, the refund is not taxable.
Okay. So I subtract that.
Right.
And if it's zero, I claim nothing.
That's exactly right.
Okay. So did you want to get into other?
What would you like to get into?
Did you want to do that on your agenda?
No, well, I got like 6 other calls I got to get to. But did that help you, Mary Ellen?
It does.
All right. Thank you, sweetie. Bye-bye.
Hey, I want to say before we forget, don't forget, Esther, you wanted to talk about the fact that people might be getting inflated refunds now.
Yeah. One of the things we're doing this year, and again, 8030930, 8030930, star 930 on cell phone. One of the things we're doing at EG Tax is when we do your 2017 return, we say, okay, now this is what it would look like for 2018 if everything stays the same. So let's say somebody's getting an extra $1,000 next year.
Right.
So I say, now what you need to think about is how much extra are they giving you in take-home pay now?
Mm-hmm.
So if this client likes a $4,000 refund and next year he's supposed to get $5,000, all things being the same, but he's getting $2,000 extra
Right.
in withholding this year, that means his refund is not
gonna
going to
be
go
short.
up $1,000.
Right.
It's going to go down $1,000.
That's right.
So that's something that you have to look at when you're planning for next year.
And then even I've had some clients that are getting extra money in their refunds, but the fact is they're going to have less of a refund next year because they're losing some of their personal
And
exemptions.
that's exactly true. But then, and so that would be the double whammy.
Right.
I was telling a client the other day, I said, we wanted to make sure we let everybody know so that next year they don't fall in the floor dead if they
Yep.
they don't realize that they got the extra money and their refund is going away or might be going away.
Yeah.
So I'm Esther Golias, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on your cell phone. Love to hear what you have to say about your taxes, and we're going to talk to Patty. Hi, Patty.
Hi. Here's a question. I'm married and we're filing separately.
Okay.
I am going to hopefully declare the mortgage interest. However, the statement from the bank came back. Both the names are on the mortgage. Statement from the bank came back in his Social Security number. Do you see any? He's not going to claim it.
All right. Well, first of all, when you're married filing a separate return, if you itemize, he has to itemize as well.
Okay.
So you can't give him the standard deduction and you itemize.
All right. That I got. Okay.
All right. So that's number one. Number two, you want to make sure that you're not just filing separate and having it cost you money. I mean, why are you filing separately, Patty?
Well, that's a whole big...
All right. So maybe it's because you want to make sure that your refund isn't given to him?
Well, it's very involved, but at any rate, we...
Okay, well, let's just, I just want to get this point out. Let's just say that part of the refund that you don't want him to get, there is a way to split up refunds on the direct deposit line. In other words, you might decide that he gets $1,000 of the refund, it goes into his bank account, and you're getting $3,000 of the refund in your bank account. That way, you're not shooting yourself in the foot.
Called the
because
form
many,
8888. 48.
Right, 8888. So that way, you're not costing yourself money in taxes by filing separately. Or maybe he has outstanding student loans or child support, and you can do
innocent spouse, injured spouse,
injured spouse.
Yep, and you could do a New York 280.
Right. So that way, the refund that they would seize for him doesn't affect your tax return, because many times filing separately is not the best thing to do.
One thing I've seen people file separately a lot of times lately because they're doing student loans, and so they have to lower their income in order to get the reduced payment for their student loans.
That's true. That's true. So anyway, I don't know if I answer your question. But
well, yes and no. But if we do still consider filing separately, and we go that route, and I do all the deduction, I know he has to do the same thing as I, standard versus I.
Which means it'll hurt him.
Both your names have to be on the mortgage and the deed.
Right.
I remember you asked that.
Right. And your name's on the mortgage, right, Patty?
Right.
Okay. They just didn't put in his name. So that's not a problem. If you get audited, you could prove that it was paid out of your joint bank account and you were on the mortgage.
Okay.
Okay. Be very careful, dear. Okay. Thank you. I'm Esther Golias, the tax lady. 8030930, 8030930, star 930 on cell phone. We're going to go to Ron in Buffalo. Hi, Ron.
Hello.
What can we do for you, sir?
My wife died this and I wonder if I should file my income taxes.
Are you working, Ron?
No, I'm retired.
So you just have Social Security?
Social Security and pension. And,
how much pension, Ron?
And that from the undertaker.
No, how much pension?
Pension only $3,000.
Okay, and she just passed away last year?
Yeah.
Okay, that was all of the income you have?
Yeah.
Then you don't have to file.
Plus my bank interest?
Do you have a lot of bank interest?
No, very little.
And no dividends or interest or stock or anything like that, right?
No.
No rental property?
No.
Yeah, you don't have to file.
No?
Nope.
How about...
Did they take any money out of your pension plan? They didn't withhold anything, did they?
No.
Yeah.
But I got money from the Social Security.
Yeah, you don't have to file.
No?
No.
You don't have to file unless you make about 28.8 beyond Social
Yeah.
Security.
28,000?
Yeah, beyond Social Security.
Oh, I didn't make that much.
I know. Okay, Ron?
Okay, thank
All right, God bless you. I'm so sorry. Bye-bye. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone, and we're going to go to Lancaster. Whoops. Yep, there we go. Hi, how can I help you? Hello?
Hello?
Hi.
Hi. My question is about the college credits.
Yep.
My son, he's 22. He did not go to school at all last year, and he made $8,000, and the 1098 came because it's for the current year, 2018. Is he allowed to get the refundable credit or the American Opportunity Credit?
Okay, so he can get it, but you can't claim him as a dependent.
Right.
Because what happens is they front end load for the spring semester for the American Opportunity. How many years has he been in school before?
He was till age 18.
Okay, just high school, right?
Yes.
So that American Opportunity Tax Credit, if he puts it on his return, he's going to be limited. He can't take the refundable portion because he would be eligible. He's under the age of 24. He'd be eligible to be your dependent because you're still supporting him. So he won't get the refundable portion, but he'll get part of the American Opportunity Tax Credit.
So what Esther's saying is, why aren't you claiming him?
You can't. He made $8,000.
He's only 22. He didn't go to college.
He didn't go to college.
He
got the 1098T
right.
for spring of this year.
He didn't go to college in 2017.
No.
Oh.
Yeah. So he's going to file a return. He'll get the American Opportunity. Maybe what you'd like to do is just because that credit then will, if you just wait till next year and adjust the 1098T so that it's more proper. Is he going to like a New York State school?
Yes.
Yeah. Hang on. We have to take a hard break for the news. Can you hang on for a sec?
Sure.
All right. Thanks a lot. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on your cell phone. We'll see you on the other side. Hey, this is Esther Golias, the tax lady. We want to help you with your taxes. Give us a call, 8030930. 8030930, star 930 on your cell phone. We're talking credits, and really, that's really what you're kind of calling about is the American Opportunity Tax Credit. So here's the thing. Your son made $8,000, right? So after his standard, you are there. Hello? Are you there?
Yes.
Okay. So after his standard deduction and personal exemption, because he's going to claim himself, he's not going to pay any taxes. So really, the credit does no good for anybody. Okay, but if you next year, because he then will qualify as your dependent next year if you're still furnishing over 50% of his support, if you use his billing statement when you're doing the AOTC, you'll get a bigger bang for the buck, at least on the state at least.
Okay, so then I can use the 2017 amount too because it's for 2018 count.
Right, that's right. You'll use it on your 2018 return.
Okay, and why can't he get the refundable?
Because
the age of 24.
He's under the age of 24.
Unless he provided more than 50% of his
support. Right.
Did he provide more than 50%?
Not with $8,000. Right?
Yeah, it would be hard.
Okay.
Okay?
All right, thank you very much.
All right, thank you. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. Okay, we were talking credits. So we talked about the earned income credit for people without children. But what if somebody is a qualifying individual and lives in your home and you have earned income? Then the credit that the federal government gives you is up to $6,318, okay, if you have 3 children. And so to get that, it starts at your earnings, and it starts to escalate as your income goes up. And at, let me see, where is it?
It's like a bell-shaped curve.
At $14,000, if you have wages of $14,000 and 3 qualifying children, considered children, qualifying individual in your home, the federal government gives you $6,318, and the state of New York gives you 30% of that. So the state of New York gives you $1,895 in addition to that. So you get $6,318 plus $1,895 from New York State, 9, 10, 11, 12, 7, 6, 7. So you get $8,213 if you maintain a home and you work for a child that's considered a child. Now, a child can be your child, foster child, stepchild, your
sister,
your brother, sister,
niece,
nephew, that is under the age of 19 or under the age of 24 and a full-time student or disabled in a home that you provide.
And what I really like to say, if you are a divorced parent and you're the custodial parent and you have to give the claim for the child to the non-custodial, you can still get earned income credit even though you don't claim the child as a dependent. And so that's really important.
And a lot, I amend those returns all the time.
Me too.
So let's say it another way. You're the mom. The kids are, usually it's the mom. The kids live in your home. The daddy gets to claim them. You guys don't live together, but the children are living in your home. And so you didn't know that you could get the earned income credit because you gave away the dependency. That's not true. The earned income credit is still available even if the child is claimed by the non-custodial parent.
Right. And something I'd like to say, there was a text-in question. It says, is there a fee to pay your federal and state tax bill with credit card? There is. You usually call 1-800-2-PAY-TAX. And they do charge a fee.
Right, they do charge a fee. So I just wanted to talk about the earned income credits. They are very liberal. They save you a lot of money. They get you a lot of money, and there's a lot of abuse with it. So that's why the IRS is holding up refunds because of that. The next credit we want to talk about is the child tax credit, the additional child tax credit, the American Opportunity Tax. There's all kinds of things in the tax law that they send you money even though you didn't send anything into them. I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone, and let's go to Rob in Lockport. Hi, Rob. How can we help you, sir?
I have a question. My girlfriend didn't claim one of her kids as a dependent last year because she thought it was her ex's year to file him. And so she was told that she can do a
amended
return.
Amendment. She didn't know if she should, if it would increase or decrease her amount.
It would increase her refund.
Okay.
So she should. She's letting money sit on the table. The kids were living with her?
No, they're living with her.
Did she have wages?
He stated that he gets them every other year, claimed him every other year.
Okay, and he didn't claim them?
He didn't claim him because she thought it was
her. All right, so Rob, you should tell her to file an amended return. Does she have wages?
Oh, yeah, she made money last year.
All right, and so you're not the dad, right?
No.
Okay, so are her wages like under $40,000?
Yes.
So she has that earned income credit that she would get the refund that we were just talking about. She would get that money.
And it sounds like she was doing every other year. She should have been claiming that child every year for earned income credit purposes.
So she may have refunds coming. How many kids live home in your home with you, Rob?
We got 4. Three are mine and hers, and 1 is hers and her ex's.
All right. So are you working? Is she married?
No, we're just
living together.
Haven't gone that
right
route yet.
All right. So she already has 3 children for the earned income credit, then, right?
She claims 2. I claim 2.
All right. And okay, so she would then get the 3rd, which would increase her refund by about $1,000 on the federal and $300 on New York State. So $1,300 is a lot of money.
That it is. And roughly how much does it cost, or how much does it,
What would our fee be? Probably about $75.
$75 for another $1,300?
Right, and they're going to send you the interest on it, so that'll cover most of the fee.
And it'll affect the state and federal, too.
Right.
She'll get money back
Okay.
from New York.
Oh, okay, that sounds good.
All right, thanks, Rob.
All right, thank you.
Bye-bye. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. All right, so we talked about the earned income credit, right? Then there's a child tax credit. Now, who's that for, Tiff?
That is for kids under the age of 17, and that is a child tax credit. And next year it's going up to $2,000 a child.
Right. So when your child, in the year the child turns 17, the credit goes away.
Mm-hmm.
So if you can't use the credit because you don't have that much taxes, it ends up to be a refundable credit if you have wages.
Right.
Right.
That's called
Around
the additional child tax credit. Mm-hmm.
So not only does, in our example here with the mom who might have made $16,000, she has no liability because
Right.
she's got 3 kids. So she's going to get an additional child tax credit of $3,000. So now she's up to $11,213 that they're giving her back.
Right.
And the state of New York is going to give her $990.
That's right.
If the kids are between the ages of 4.
And the Empire State Child Tax Credit is between the ages of 4 and 17.
So she's got refunds coming of $12,203 of money she didn't pay in.
Right. Pretty good. That's something that you don't want to miss. And so these are the
And so you see, the
refundable
thing
credits.
is, if you have a child living in your home and the child and you have wages, the first thing you want to look at is the earned income credit.
Mm-hmm.
The next thing you look at is the child tax credit.
Right.
And the next thing would be the refundable child tax credit.
That's right.
Right?
That's exactly right. And it's a wonderful credit, and it really helps. It's designed to help families who are working and putting food on the table and maybe working 2 jobs, and it's a great credit.
That's right. And so it was put in the law to make sure that you're rewarded because it becomes a real hard thing about what am I going to do? Am I going to go? Is it better for me to be on
stay at
welfare,
home.
or should I go to work? If you go to work, and you have kids at home, it's a way to help.
And I got to say, a lot of my clients who right now under the current law who make an average amount of money, they're losing the child tax credit because it's going away because they make that much, because they make a lot of money. It starts going away, I've noticed, of married couple when they're at like 110. With the new tax reform, the plateau is like $350,000.
Right.
So that child tax credit isn't going to go away as easily going forward.
Right, and it's $2,000.
Yep.
I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we want to hear from you and what you would have to say now.
I got a text-in question.
Yeah.
It says, I legally adopted my partner's daughter. She claims her on her taxes, and I provide 50% of the support. Can I file head of household based on that qualifying child?
All right. In order to be head of the household, you have to claim the child.
Mm-hmm.
You have to have a qualifying child that lives in your house. So if your partner is claiming, I'm assuming you aren't married, is claiming the child, then the head of the household would not work, because the two of you maybe should sit down and look at who's going to do better.
Right. I'm thinking legally adopted my partner's daughter. She wouldn't that mean
Then it
they
means
got
it's
married?
her. It means it's his daughter.
Right. But as you said, you can't do it unless the child lives with you.
Well, the child does live with them, but she's claiming the child.
Right.
So, right?
That's confusing.
It is confusing. I presume in this situation, the two of them should sit down together and see which is going to work out best.
Yep, and I do that all the time.
Okay, another credit, and this lady that called a couple of calls ago was talking about education. Education credits are unbelievable. All right?
Very good. Yep.
So if you have a child that's going to higher education, under age 24, and is a full-time student, and has not claimed the American Opportunity Tax Credit for 4 years, more than 4 years, then you can get a credit up to $2,500 on the federal and up to $400 or even better on the state of New York. So we're talking about $2,900. The child cannot get the refundable credit if they're under the age of 24 and are being supported by mom and dad. They only can get the part to wipe out their liability, not the refundable part. So when your kids say they want to claim the credit, it's really not, I would say 98% of the time, it's not in the best interest of the parents to let the kids claim the credit.
Right.
Because the parents get about over $2,900, the kids might get $1,000.
Right.
If that.
The person who was working made $8,000, they didn't have a lot of liability. So if that,
Right. So in our situation with our lady or gentleman or whoever that was up to $12,203, they might get the $1,500 refundable portion. So now they're going to get refundable money of $13,703.
Right. That's right.
If they had a kid in college.
Yeah, a lot of times when this happens, I'll have the parent and the kid together.
This is money nobody paid in. This is money that you, the taxpayer, has given to these people. So but these are things in the tax code. People that come to tax school, they're blown away. They said, "What? I didn't know this was in the tax code."
Yep.
Right? Let's go back to the phones. I'm Esther Golias, the tax lady. 8030930. 8030930, star 930 on a cell phone, and let's go to Robert. Hey, Robert, how can we help you?
If you have earned income in 2 different states because you moved during the year, and you also have dividend income, how do you figure out how much to apply to each state?
Well, the earned income credit is a federal credit. So if we're talking about the earned income credit, is that what you're talking about, or you're just wondering about how to do state returns, right?
You look.
Are you wondering about the state returns, or are you talking about federal?
When you make another $30,000.
What did you say?
Yeah, usually you look at your W-2, and at the bottom of your W-2 in box at the bottom, it'll tell you what state you worked in and what proportion is for each state.
Right. So if you're talking about on your New York return, you would have your New York non-part year resident, and then whatever other state you had, you would be a part year resident as well. So you would be doing a New York part year resident and let's say Pennsylvania part year resident. And that would be right at the bottom of your W-2.
Dividend income.
All right, dividend. You have to allocate it based upon how it was received. So if you were 12 months out of a 12-month period and you got dividends of $1,000, then and you were 50-50, you would do half on one, half on the other.
Okay.
Okay.
Thank you.
Thank you, sir.
Good question.
Yep. I'm Esther Golias, the tax lady from EG Tax. 8030930. 8030930, star 930 on a cell phone. So, getting back to the American Opportunity Tax Credit, that is a big credit. And, what I always do is I love it when my clients do, they bring in their kids and I sit Junior down and we first do their junior's return, and then we show how much that his refund would be if he claimed the credit. Yep. And then we show Junior how much mom and dad are getting, and I say to mom and dad, why don't you give the money to Junior?
That's right.
His portion.
Yeah.
But then they come out almost $2,000 ahead.
Yep. And then that makes Junior happy, and it makes the
Junior
household
says,
happy.
I don't trust mom and dad.
Right.
So then I do the 8888 and allocate part of the money to Junior, and Junior feels a lot better.
He feels whole.
Right.
Yeah.
He feels right. So I'm Esther Golias, the tax lady. 8030930. 8030930. Star 930 on a cell phone.
Okay, so we're going to go to
Robert. Hey, Robert.
Hello.
Hi.
Hello. I went blind the year. Do I file taxes?
Robert, do you have any income?
Just my Social Security and my pension.
How much is your pension, Bob?
My pension is about $4,000.
For the year?
Yeah.
You don't have to file.
No?
Nope.
Why is that?
Well, because there's a minimum filing requirement, okay? So the minimum filing requirement, to just make it real simple, is your standard deduction plus your personal exemption, and since you're over the age of 65, you get a little another deduction for being over 65 and blind. So you're way up there, like around 15,000 before you would have to file a return.
Okay.
Okay.
Thank you.
Thank you, Robert.
Bye.
Yeah, and that's the conundrum, because if he had wages and he was under 65, I would say you don't have to file a return. But if that was the case, he would want to file a return.
Right.
Yep. Let's go back to the phones. We got Peggy in Buffalo. Hi, Peg.
Hi there.
What can we do for you?
My big question is qualified dividends.
Yeah.
For next year, have they decided what they're going to do?
Oh, yeah. The really interesting thing with the change in the tax code is they didn't change any of the income computations. The same 21 lines that were there before are still there. All the adjustments are there.
So you get a favorable.
The only change is the increase in the standard deduction and the elimination of the personal exemption, and some of the pass-through on, to simplify it, some of the pass-through on businesses. But the qualified dividends are still there and are still taxed in the same way.
At a favorable rate.
Yep.
Yeah, that is a favorable way. It is a reduction in your tax.
That's exactly right.
Which is really good.
Okay.
In all your talk, you hadn't mentioned the qualified dividends, and that's why I thought.
Oh, okay. Well, I'm glad that you brought it up. This week, I was just kind of talking about credits. I try to come up with something, but I have talked about qualified dividends and how important they are, and they really are. And many people, Peggy, don't know that when they get qualified dividends, they have to do the tax computation on the Schedule D, as opposed to using the tables or the tax rate schedules, because when you use the Schedule D, you compute it out at the lower rate.
Right.
Okay.
Okay, then. Thank you very much.
All right. Thanks a lot for calling.
So, Esther, because clarification, the couple says we are not married, gay couple, we live under the same roof. So can I qualify for head of household or single? And so the answer is
in order to have in order to qualify for head of the household, you have to have a qualified individual that lives in the house.
So one can do head of household.
All right. So one of them would do head of household,
and
whoever has the higher income,
and the other one does single.
Right.
Yep.
Okay. And let's see. And wasn't there my wife's son left him?
Oh yeah. The other one is my wife's son left him and his daughter back in May. Can he claim head of household this year?
Depends on if he. All right. So if they're still legally married, then there is a ruling that says that if you haven't lived together for the last 6 months and the person that's living there is supporting is providing a home for a dependent child,
She left in May.
Right, so that's more than 6 months. I don't know if the daughter is 40 years old or 12 years old or 2 years old, but if it's a minor child, then he's maintaining the home for the minor child on his own. In that situation, he'd be considered head of the household, and he could claim head of the household, yes.
Yep. Somebody said, thank you, ladies. You're so helpful. Keep up the good work.
Oh, that's so nice.
That makes my heart smile.
All right. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. And we're going to go to Eric in Amherst. Hi, Eric.
Hi, Esther. Thanks for taking my call.
Yeah, my pleasure.
So my wife and I, we have a 14-month-old, and she's our first.
Ah.
So we're brand new to this whole child thing, and I'm.
Well, I want to tell you something. I tell my clients, I hate to sound rude or crude, but the best thing you can come up with is some kids under the age of 17. I mean, so good for you. Next year, $2,000 for the baby. This year, the baby is a deduction and a $1,000 credit.
Oh, that's interesting. That's why I'm calling, because I'm trying to get educated on what credits are available for children.
All right. Well, another one we didn't get a chance to talk about is a daycare credit, child and dependency credit. So, is the baby in daycare?
No, my wife's a stay-at-home mom.
Okay, so you're going to get the child tax credit. You're going to get the personal exemption this year. The child tax credit is $1,000.
Maybe the earned income credit.
And how much do you and your wife make, Eric? Approximately.
So my salary at work is about $110,000, and then I also have rental properties of about $80,000 or $90,000.
Okay. All right. Whoa. Okay. So you may lose the child tax credit right now because you start to lose the child tax credit if you make too much money. Now, when your $80,000, is that gross rents or is that net?
That's gross. So,
all right. So you have, after your expenses, you don't net that much, right? What are you netting? Anything at all?
No, after mortgages and expenses, we typically take home about 45 or so.
But what's after depreciation?
Yes, correct.
You still have on $80,000. You come down to $30,000 taxable.
Yeah, so we have two duplexes in a pretty high demand area next to UB North Campus.
Okay. All right. Well, at about $150,000, then you would still get part. You're going to lose part of the child tax credit because it phases out next year. Though it doesn't phase out till about $300,000.
Right.
So you're going to you'll get the whole $2,000, but this year you'll have a phase out.
So you won't get the full $1,000,
right,
but you will get the personal exemption for you, your wife, and your new baby, which is great. Yeah.
Because you and your wife, based upon that, should be looking at probably the 28% bracket. So your child is going to save you. I'm doing the math.
While she's doing the math, don't forget that your wife can put money into an IRA based from your income. She could put money into an IRA to reduce your taxable income and give you more of a child tax credit.
But even if you lose the child tax credit, you're still going to save about $1,520 just because by virtue of taking the child as a dependency exemption this year. Next year, there is no dependency exemptions. There's just the child tax credit.
And I would look at putting money into an IRA this year,
especially with that kind of income, if you can.
Okay, so you think it's good to kind of give her some income to put away to kind of...
Well, I mean, it doesn't hurt. Anytime you can save money, and again, at 28%, if you set aside $5,000, $5,500 for your wife, you're going to save another state and federal almost $2,000.
And on the bottom of the 1040, you'll get the IRA deduction, which will adjust your adjusted gross income and give you more of a child tax credit.
Okay, Eric?
Thanks for your help.
Hey, thanks for calling. I'm Esther Gulias, the tax lady from EG Tax, where our offices are open 9 to 9 Monday through Friday, 9 to 5 on Saturday. If you need us, go to egtax.com. Thanks for listening. God bless. Have a great week.